Welcome, everyone. It is 9 o'clock. Welcome to the Kendall Report. And two streams in one day. It's always interesting to do that. And we saw a lot of action today, to say the least, and we got to spend the last hour together. And there's a couple things here. I was just reading through some news preparing for tonight's show, and I read what happened today. I was so busy during the stream today, and we saw this massive short covering rally, right? And supposedly this was based upon, there was McConnell said that we're going to have some sort of deal, right? Well, it turns out it's just a temporary deal. It's not even a real deal, right? But like I said before, the whole thing about the debt ceiling is a lie, and they could just, all they have to do is revise the budget resolution, and they can do that with 50 votes on Democrats and the vice president, and it's a done deal, right? So it's all theater. Everything that we see is theater. I went through a big rant today, so I'll spare you that tonight. But one of the things that I think is really interesting is how the algorithms pick that up. Most of this was short covering. We're seeing some follow through in the market tonight. I'll go through the details here in a minute, but we are seeing some follow through. And one of the things that popped up on my screen when it updated is there is a cycle low being signaled in the S&P and in the NASDAQ. So it's very interesting how things go. And I know, I talked about earlier today this whole situation with how this 4260 level keeps holding. We bounced out of that level. I went through all the details earlier today, but we keep bouncing out of this level. There's some kind of support here, and they keep coming up with some excuse to move the markets higher. But I really, I don't know how much confidence you folks have in the decisions being made in Washington, but this was a non-decision. All they did was kick the can down the road and make it so we wouldn't default. So there's more time. The comment that I saw from McConnell was that they are giving the Democrats a way to use normal procedures. Now, I'm not sure what that means, other than I think maybe what I just talked about is revising the budget resolution, and just, they probably could eliminate it just on a budget resolution. Sorry about that. And, we're just, it's a crazy world that we're living in. So far we're still kind of locked in a range. We've been in, I'll show you here in the technicals in a few minutes, but we've been in the same range the last 5-6 days. We've been whipsawing back and forth, almost virtually the exact same high low every day. We've seen a volatility spike as far as that goes, but there's really a number of things that are just keep happening. One of the things I pointed out, and I'll go through the Dow Jones transports. I talked about the transports earlier today. So when we get into the main section of the show tonight, I want to show you something that I took some liberty to build. I pre-recorded it, so I'll play it for you just so it'll be very efficient. It's about 3.5 minutes to go through, but I'll go through that here just shortly. But after all the rally, the S&P was up 0.4 after being down 1.3%. And that was not even compared to where the futures were overnight. And NASDAQ up 0.5. This is a huge recovery, to say the least. And then Russell ended up down 0.6. So we're just, the traction across the board wasn't really that even. And the small caps, as you know, I've been talking a lot about that. So that spread came in a little bit today, nothing material, but we're still seeing this grinding of the different things going on. So ADP, let's talk about what came out. ADP beat yesterday. There was expectation of 405,000. We came in at 568. And so that's a little better. A lot of times sentiment will also build that, hey, if that comes out better, then employment numbers on Friday will come out better. And that there's really very little correlation there at all. But it will affect sentiment sometimes, especially when we were just so negative. So the question is, this budget deficit thing, was that the whole thing driving this decline in the markets? I don't think so. I think, as I mentioned earlier today, I think there's a lot of other factors out there that are starting to drive the market. We saw uh, the housing numbers come out minus 0.69. We continue to see housing kind of have very mixed numbers. There was mortgage number of mortgages done last week were down as well. So there's no real leadership in the economy right now. And I still think with the reconciliation bill and the infrastructure bill, this deficit situation, or not the deficit, but the debt ceiling is still a material issue. It didn't go away today. Markets acted like it went away. It didn't go away. So we'll have to see if the markets become skittish again over the noise that comes out of Washington. I'm not sure it will, but things are setting up an interesting pattern. So today, Thursday, we have a 345. We have claims coming out expected to come in at 345. I've talked a lot about, I think that these employment numbers will start to really deteriorate, but we're early October. I still see this as mid to late into November when I'm expecting to see these things slow down. I'm not seeing that happening just yet. And then the continuing claims came in at 2.8 million. The only numbers that are going to matter to me are 2.5 million if we went below that, or above 3 million, and that would give me some thoughts and some metrics that I'll be able to extrapolate out maybe what's going on there as well. It's just kind of interesting, just on this whole short covering thing. Used to be a guy back when I was on the trading floor, a guy named Paul Kangas. He was on NPR, and he would do this nightly business report. And every half hour, he'd pick a news story that happened in the markets, and that would be why the market rallied or sold off, up or down, and every little wiggle in the markets. I remember coming home and I'd watch that and go, gee, I didn't hear any of that. And I was on the trading floor. I was on the exchange. None of that stuff happened. And it's the same thing that we're seeing now. All of the news, it's elevated to another level because the algos will pick this up. We've got a lot of HFT guys that are using algos to trade off of. There's just a lot of things going on there. So I just thought about that earlier. I remember this guy would have an excuse for everything. Maybe it's actually reality now when these stories come out. Maybe these algos are driving that. So we used to, wonder, how they came up with the stories. But now there's, like I said, there might be some relevance as far as that goes. So what I want to show you, a couple things. I've got the transports on the screen here. And what I want to show you is that this transport setting up, there's the PPM1 is starting to look pretty good. PPM2 has got some work to do. But I want to show you something, and this is a pre-made video. It's about 3 minutes, but I want you to see this, how easy it is to take and hack an ETF and make an amazing strategy out of it. Because I talk all the time, I tell you about our product, but I just wanted to show you how this works. And it's relevant because what I'm doing here is actually developing the list like we did on the Buffett strategy last May, which made about 125% in 1 year. The same thing, I think, is going to be relevant on the transportation if I'm right about what I'm seeing on the graph that's on the screen here. And if that's the case, then we're going to see some things. So let me just play this video for you. It's very quick. Like I said, it's like 3 minutes, but it's going to tie together what I want to talk about in this theme that I'm coming up with is transportation. So let's take a watch. In the live stream, I mentioned that I thought the transportation sector was looking fairly good, at least for a possibility of a run. So I wanted to just show you how easy it is to build a strategy and be able to automate and hack an ETF. Now I went into First Trust and I found this First Trust Transportation ETF, and I downloaded the constituent list, and it looks like this. So this is all the constituents. All I have to do is copy these. I'm going to build a multivariant strategy very quick. It was called the Smart Transportation. So I just go in and go to our portfolio designer. You'll see how crazy easy this is. And I'm going to go through here. Portfolio name is going to be Smart Transportation. Just hit next, and I'm just going to set this up very quickly. I'm going to back test to 2016. I'm going to put $250,000 in the account to model it. We're going to go forward and change. I'm just changing a couple numbers here that will help to make it operate. I'm going to use all the cash very aggressively. High activity, low liquidity just means we're using the cash aggressively. Here's where I put the symbols in. I'm going to paste in the symbols that I just copied from the spreadsheet. I come over here, I just paste them in, and I'm going to add symbols optimize weekly. None of this will make sense to you, but I'll show you how easy it is to make this happen. And so I'm going to trade these on a daily short-term model, and I'm going to trade them on a weekly model. And so they're going to be double trading these on a short-term increments as well as the intermediate. So I'm just going to build this out. It's calculating. We're going to put, I hit finish, and it's being updated, and we should see it pop up on the screen here. So here's the portfolio here, Smart Transportation. I tested back to 26. I'm going to overlay the S&P on here so we can get a comparison here. The blue line is the S&P 500. The green line is this transportation, just these stocks that I put in there. They're airlines. If we look at the open positions here, there's airlines, there's Borg Warner, JetBlue, JB Hunt. So there's a lot of different types of transportation in here. And so this is just the symbols that they included in the ETF. And we go to the performance here very quickly, and we'll see there's one losing year, 2018, but everything else last year up 151%, and 2021 up 12%. And if we look at the current open positions, it shows exactly what we own right now. So this is potentially a really good list. I'm going to be going into some more details on what I believe will be something even more significant from the standpoint of how to build a list of stocks that we want to trade. If these transportation stocks start to move, we'll be able to play them out pretty good. If I'm right in the expectations of these moving, then the models will continue to hold a lot of these stocks, buy some more, and be able to participate. As I mentioned in the live stream earlier today, we did the Buffett strategy, and it made about 125% going from May to about May. Yeah, so one of the things that, like I said, I wanted to show you that because it's very simple to build this. About 80% cash is being used in that strategy right now. So it's actually set to move forward already, and there should be some rotation. I've got two other ETFs that I'm working on right now, and Jay and I were working on this earlier a couple hours ago. And I just wanted to show you that because, I mean, that portfolio did 150%, so maybe should have come up with that idea last year, but we did have quite a few pre-built strategies that did quite well. Last year was a phenomenal year. But this year, it's up 12, pretty much in line with the markets for the most part, between 12 and 16%, all the indexes. But the point of showing you that is that I'm going to build this out. I'm going to make that a theme because I have oftentimes been able to pick some themes that are interesting to be invested in, like the Buffett strategy last year. That was easy, but this one I think is potentially got some upside here, and I think this could be maybe a leader in the markets here is transportation. So we spent a lot of time talking about Russell and that asset class, but this thing's been lagging, but it looks like it's on a screen here. Looks like almost a perfect fourth wave triangle setting up. PPM's turning up. PPM1 is looking incredible. So we definitely want to be paying attention to this segment of the markets. And if you think about all of the bottlenecks and all the things that need to be moved around, we've still got 60 some odd ships out in the channel yet out there stuck, and they got to unload these things, and somebody's got to move them. And the truckers and trains and all that stuff is definitely going to be in play. There's no way that those businesses are going to be slowing down. There's so much catch up with all these bottlenecks everywhere. So let's go ahead and get into the database for tonight and just take a look at what's going on there. Believe it or not, after this big run up, we didn't really get any traction. In fact, we lost a little bit on the numbers from that standpoint. Matter of fact, the database went back to where it was, I believe, a couple of days ago. It was exactly at the 2177 level. I just want to refresh this because last night the server, yeah, here we go. That was an old number in cash. So 2310 is the number. That's the number I have on a sheet. So we actually went down slightly. We had buy signals 271. New buys, we had 376 sell signals. And so there's still a little bit of a negative rotation, nothing material here, but it is definitely seeing just a grinding down here. And this is what I talked about last night. And it's going to take this to get back above, you guys know the number, 42% to actually be able to get enough traction that maybe we can start to see a move back up in, let's just say back in 44 handle and even think about the 45 handle on a basis the S&P. So there's definitely a lot of work to do. Like I said, I'm questioning the so-called, we'll do deal, right? Do air quotes on a deal. I'm not sure that was a deal. It looks like an extension. So we still have more noise to put up with on this debt ceiling, I think. I'm not sure it's over. And of course, they've posted the infrastructure deal to come together around the end of the month on Halloween. So that's pretty appropriate. So let's go ahead and take a look at the S&P futures. We're up 13 handles right now, 43.67. And you'll see this little dot right here. I'll put a cursor over it. That dot is the signal for a cycle. And we had a bit of a reversal, but we've seen this before. You could go back, like I was talking about earlier, if we go back to last Friday, that rally we got last Friday, the high was 65, 43.65. On Monday, it was 43.62. Then on Tuesday, we got 43.59. Yesterday, 43.57. Now today, we're back at the 43.72. So this is a new high in the pattern. Now, whether we can hold this overnight, if the optimism starts to come off, or we get some noise out of this so-called debt ceiling deal, we'll see what we get. But right now, what it looks like is that we're going to see a move on the market since we're back above the 10. If we can stay above the 10, we should at least get to the 21. But I want you to look at the PPMs. PPM1 is actually turned down in spite of yesterday's reversal. There's still kind of some negative influence coming in here. And just looking at the grid for today is that the grid is looking at, here's S1 is 32. And remember, if you look at this range, we've got a huge range on the market grid from 42.64 to 44.43. So, I mean, that's a huge range. And so this is expanded. So typically what happens is, I mentioned this last night, I thought we might get some volatility, S2, R2. Well, if we look at just yesterday's market action, S2 was 42.85. We went just below that, 42.73 overnight, the high 43.57, and R1 was 43.57. So we did the R1 S2 basically that I talked about last night. And, we printed this deep low. So there was definitely some resistance right where we finished. So we go, this is yesterday's numbers I have up here. We go to 10.7. What we'll see here is R1 is 43.75. We're trading R1 already. The low 32. So expect to see some volatility tomorrow and two-sided trading. I would suspect that we're pretty close to the possibility of stalling here, but there's a couple numbers here, and I mentioned them in the live stream today. 43.93, and that is the 21-day moving average, but we look at the R2 for today is 43.99. So that would be pretty substantial follow through. This cycle that I mentioned a minute ago, that's coming in play. You'll see it's also in play on the NASDAQ as well. So there's definitely some upside bias here all of a sudden. And, we go back a few days ago, everything was looking very negative. So we've really, like I said, we've had virtually the same range every day for the last 4 or 5 sessions. Now we're finally printing into a new high, but there's still resistance overhead. PPM2 is at a minus 0.15. So that is still enough influence to keep that number, probably the market's below that, but that's up at the 43.99. So the extreme I would put it for today is going to be at R2 would be the absolute extreme. We're already, like I said, trading R1, so look for a possible reversal, and that's very likely from this level. So maybe we'll print a little bit above this, but there's definitely going to be a lot of pressure. PPM1 turning back down again at minus 0.15. A little bit of draw for the market to go back to that 56, the potential going to 43. So let's take a look at the NASDAQ. You're going to see the same thing here. We got the magic blue dot there, which is a signal for a cycle low. We're still a little bit struggling here to get above the 10-day moving average on the NASDAQ. We're up 63 handles, but if we look at what that number is, 10-period moving average 14,816, PPM1 is a minus 0.32. That tells us there's a pretty good chance, like only a 40% chance that we'll get above this level and stay above it, and a 60% probability that we'll get a rejection around there. So we look at the R1 number, 14,850, high 14,838. So look for a possible rejection off that number and maybe a retracement at least back to S1, 14,637. Just like with the S&P though, if we print through R1, next level 14,952, all of a sudden we're starting to look at some of these upper numbers around 15,000 again. So the real term maybe is that maybe the noise around this debt ceiling really isn't as important as everybody was playing it up. And I'm not sure it was being played up that well, but certainly the reaction that we saw on basically nothing news, that there really isn't a deal but an extension, and the opportunity for the Democrats to use normal procedures, which I'm reading between the lines. I don't know this is true, but that would mean to me that they're probably looking at maybe just doing the 50 votes with the vice president and amending the budget resolution, which would be really simple to do. But I think they, as I said earlier today, they still want a fingerprint of the Republicans on this money so that they can do that. Janet Yellen made that really clear in that clip that I played earlier today. So that's something to watch out for. But this should be the ranges for the NASDAQ as we come in to tomorrow. So let's take a look at the Russell. It's interesting. I didn't notice this on the Russell, but we have the same cycle coming in on the Russell. So all of these indexes are getting a cycle here. And the way that these cycle events work is like this, okay? So we get the cycle, the low that we had yesterday, which is quite is pretty significant. The low overnight right now, we're looking at this is Russell, so we're looking at the 2188. So that's key. This is Russell cash. And we look at the Russell for tomorrow. 2199 is S1. S2. S1 is 2207. So 2191 is closer to some of those numbers that were printed yesterday, which was an STX number that was printed yesterday. Yesterday's action on the cash, 2188 low, 2191 was STX. So we bounced right off of that STX number yesterday. It's interesting because I've got the Fibonacci up there. Let me go full screen so you can see this a bit better. The Fibonacci projections here, they're twofold. We've got on the extreme, on the downside, there is a number of 2138. On the upside, there's a projection that's been around for a while. It has for a minimum move to 2143. So that's our big range. But when you look at this entire chart, you can go all the way back to July. I'm going to crunch this down a little bit just so you can see a little better. Wrong way, 1 second. This is a range you can go all the way back into May, and you can be talking about virtually the same range. So this market's been absolutely sideways for months on end. And just a quick look at the weekly chart, you'll see it even more pronounced here. This goes back to, we'll just tag it here at 319, so back to March. This thing's been completely sideways. We don't really have any momentum on the upside, on the intermediate, nothing there. And that's why we look at the chart, look at the spread here. And the spread is telling us that there's still the spread is still positive. Like I said, we backed up a little bit yesterday, but I don't see this as material. So we'll just continue to watch that spread as we go forward. Yeah, so I will try to address your question at the end of this stream. So make sure that you actually ask me again at the end. So make sure you throw up something there just to finish that. But these spreads are continuing to do good. One of the things that we haven't talked a lot about, but the S&P is the top performing index this year, up about 16, and that's been the leader of all of the indexes at least year to date, right? So let's set this up just a little bit, and what I'll do is, matter of fact, I think I'm just going to go, before I transition into the final markets for tonight, I'm just going to go ahead and address what Will asked, because it's actually a very good question. And how do you hedge against this if we go to cash, assuming cash is trash? Cash is not trash. Cash is a position, and it's okay to have cash in as long as you have a buy and sell discipline. You don't want to stay in cash, but cash can be the most valuable thing that you can have sometimes, is just to have powder dry. You've got opportunity to deploy that cash. There's an old theory, and especially anybody that's around MPT, which is modern portfolio theory, a lot of times they're always looking at, I call it shifting the chairs around on the Titanic. And you want to make sure that it's okay to go to cash. And that's like getting off the boat, right? If you just change the asset class, like you can't go to bonds because there's too much risk in bonds right now. And that's why you see a lot of people trashing 60-40. 60-40 is always a bad idea from an investment standpoint. But it's even worse right now because you've got the potential still for markets to go sideways to down over the course of maybe the next several months, and interest rates to go up, which means your bond prices are going to be dropping. So it's very difficult. So it's okay to be in cash. You just don't, cash is trash only if you think you're going to stay there for a very long time. So, yeah, so I'm just looking at what you said, Will. So hopefully that's helpful. And I really believe that, we've been telling investment community for many years is cash is not trash, but cash is a position. And in fact, if you look at the MPT doctrine, one of the things they talk about is having equities and bonds and cash equivalents. And cash equivalents are part of the asset. So I'm just going to go on for a minute. We'll do a few more markets and call it quit tonight. But what cash does is it changes your exposure to the market, changes your beta. I've been talking about for a while, like on the wave tech stuff, we've got 40-60% in cash. So when the markets are going through, there's two things to beat. And I did talk about this earlier today. There's two ways to beat the market. By bringing in cash, you change the volatility of your equity. One of my old buddies on the trading floor used to always say, he'd look up at the screen, and back in the days when 100 points was a big move on the Dow Jones, market's down big, he goes, the world looks pretty tough, but my world is fine. So what he means by that is the way he was positioned against everything else was the best position. And sometimes just having that cash, changing the exposure is a big deal. This is really important to understand, especially when you look at the difference. And I'm just going to continue on here, but the difference between speculating and buying and selling indexes and doing options and puts and managing money in a pool of assets. And that's what I showed you earlier, being able to do that with a process. And I'll just end it with this. And even my institutional clients are on here, they'll know right away. I always say process over attitude and opinion. And what that means is, if your attitudes and opinions keep you in when you should be out and out when you should be in. So it's okay to use the cash. Long answer, but I think it's significant. Everybody should be willing to go to cash to change that risk factor, and also having the ability which to step back in when the market starts to bottom, especially if we at some pace we'll get a big reset. So here's the plan for the rest of the show tonight. I believe we're just going to go, there's nothing really going on in treasuries. They were down a tick today, no big deal. So we'll save that for tomorrow night and the end of the week. So we're going to do crude oil, we'll do gold, and then I'm going to cover Bitcoin again because that thing is just breaking out. Excuse me. So I just kind of being a little more interactive tonight. Yeah, I don't know. Somebody made a comment about some of the sound. This is a live stream, and I use OBS Streamlabs. There's no control I have over this like I used to upload the videos. So hopefully this is okay. And yeah, I'm hoping, Will, to do we were talking about this just the other day as actually doing some kind of conference. I was very, very jealous of the Nigerian brothers and what they just had a big Vegas conference. Was flashing me back to the day. So yeah, maybe. Yeah, it's pretty funny. Yeah, I'm not sure. I've got monster bandwidth out of this space, so I'm not sure what's going on. I will, and I rebooted earlier, so Microsoft's not the problem, or hopefully not. All right, so let's go ahead and let's go through the final couple markets here. So crude is back tracing just a little bit. We did print up to, this is the weekly chart, we did print up to 79.78. We're back at 76 and change. So we are seeing a bit of a sell-off, but we're still heading toward those numbers I've been talking about, the 81.40, 89, $90 plus. That's still in play. The PPMs are still very robust on a weekly basis, but we could see maybe a week or so, some consolidation would actually be fairly healthy, maybe trade back into the moving averages. Okay, so as far as it goes, that looks like we're set. We're probably going to see, if we look at the market grid, we're probably looking at maybe, and I talked about this the other day, you'd see a move back to maybe around 75, 74.99 to be exact. That should be your bottom end of the range here. So let's take a look at gold. Gold's continuing. This is a weekly to trade below the 10-week moving average. We're still got quite a bit of downward momentum here, which tells me that we're likely to stay below this average for at least another week, but I still believe that these PPMs are going to be turning up as long as we remain, and a key number is that flash crash low that we did way back at 1677. So that is definitely where we're at right now, and I think we'll continue to do that. There's no cycles or anything coming in right now, so we'll see how everything plays out in gold. So this will be a final market tonight. We'll go through Bitcoin. Bitcoin is actually trading through the extreme expected for the week. The RXT number is 54,038. We're currently trading as high as 55,747. We're 54,368 right now. I keep harping about this number. I know I covered this earlier today. Same number, 60,612. Close above that level, then we're going to explode toward probably 84. There'll definitely be all-time new highs starting to pop out of here. The high roughly is 64. Looks like I just had it here. Yeah, it looks like the high was around 64 and change. I'm just looking for it. I had it a second ago. Yeah, there it is, 64,858. But we get above the 60,000 number and it's going to scream for sure. So we're up another 5% today. And I think the situation I talked about yesterday earlier in the live stream is that I think we're seeing an evolution or something going on with cryptos in general. And the only one I really watch closely is Bitcoin. I don't really have enough time to watch that, but in the whole complex. But this is really significant what's going on in that we're seeing a different configuration on other assets than what we've seen in the past. And I talked about this, I kind of keep beating this horse a little bit, but the bottom line is we're looking at the rotation that continues to happen. In the past, we've seen risk on, risk off, stock market goes down, Bitcoin goes down. This time we saw stock market going down, Bitcoin went up, and then it doesn't, right now, Bitcoin's just on a run. And like I said earlier today, it might be about some of these sovereign digital currencies they're talking about. Maybe folks are just trying to run away from that altogether. And so we'll see how that all plays out. So let's we'll call it quit here tonight. Appreciate everyone. This is a lot of live streaming for one day, and I appreciate the folks that showed up. So I'm going to call this quit, and we'll dig in for the end of the week and the unemployment numbers tomorrow night. So thanks for watching. We'll talk to you tomorrow night. Just want to introduce you to some friends of mine. I've been using the Digital Tigers computers for about 12, 14 years now. They make amazing machines. It's just an absolute must to have one of these. They also have the opportunity for you to use this with TradeStation. There's a rebate. They build some of the fastest conductivity and trading computers out there. They have a deal with TradeStation that you can get a total rebate up to $8,000 on a rebate. If you're an active trader, you have to qualify for this, but all of this is possible. So make sure you go there and visit them if you're looking for a new computer, and use the discount code KENDALL5, KENDALL5. Thanks a lot, folks.